Hey guys, I have a fascinating interview for you today. It's with Michel Amar, someone I met personally, went to his house to meet him because I was so fascinated by his company. Been doing research on this name for about 3 months. And that name, the name of the stock is DigiPower X. Okay, it's a Bitcoin miner. It's a company Michel started in 2014. Again, innovative guy in technology. If you think back 2014, that's when Bitcoin was around $1,000. You guys know where it is today. He's transitioning this business into something much bigger. And it's fascinating to me because sometimes you're able to find hidden gems, especially when you have turmoil in the markets and small caps are getting crushed. And this is a name that I'm an investor in. I'm an investor in a higher price. But I want to do an interview with Michel and let him tell his story about this company because I think it has massive, massive upside potential. And I'm just going to give you a little bit of a scoop before we get to the interview. Okay, so if you're looking at this company, DigiPower X, it's trading at $1. Okay, this is a company that has a $33 million market cap, which is crazy. Considering they're doing $40 million in revenue, they have no debt, they have over $10 million in cash and Bitcoin on its balance sheet, and this company is growing significantly. Now, what I want you to pay attention during this interview is the assets. This is a company that's not your traditional Bitcoin miner. They actually own the power plants, and now they're switching, which is called Tier 1, which is Bitcoin mining, to Tier 3, which is fascinating because that's AI. That's the power generation. That's what the largest hyperscalers are paying hundreds of billions of dollars for, spending a ton of this money. You have Amazon spending $100 billion on this alone, just one company. So with 350 billion they're going to spend this year, just the top 4 or 5 hyperscalers to get into this industry. They're dying for power. They're trying to get it from so many different sources. Here's a company that actually owns their power plants. The assets of this company on the balance sheet are worth 3 times where it's trading at. Now they're transitioning from Tier 1 to Tier 3. And he's going to go over this. He's going to explain why their megawatts, I don't want to get too technical, 200 megawatts that they own, these technically go for 500,000 a megawatt when it's Bitcoin mining. They go 15 times that when they transition into Tier 3. A lot of the Bitcoin miners say they're doing this, but they're not really capable of doing this. Here's someone's going to tell you why they're doing it. They've been doing it for 6 months. A transition that's coming is going to break down the assets. And something fascinating towards the end of the video, please listen towards the end because he's going to tell you one of the greatest investors of all time is an investor in this company. Someone that I never thought would invest in a company like this. And the name of that person is Peter Lynch. Peter Lynch, the greatest value investor of all time. Okay, better returns than Warren Buffett, is an investor in this company. Just came in the latest financing round. So without further ado, let's get to my interview. Here is Michel Amar. Michel, thanks so much for joining us today. How you doing?
Beautiful. How are you?
It's great. We met several times, right? And I was blown away because when I look at different companies, I get pitched a lot of companies. And someone talked about, a good friend of mine and yours said, hey, you should look at this company. They got a great management team. They're in a space which is crypto right now, but they transition and nobody really knows about it. And I'm just like, okay, yeah, let me take a look at it. I have to say, I get that conversation a lot. And when I actually started looking, digging into it, talking to you, I wanted to meet you in person, and I was just blown away. Do DigiPower. Let's start there. Let's start with your company and what was your motivation to start it? Because right now I think things are fascinating and you're in this growth trajectory that no one's really talking about. And I think people could really, really do well with your stock here. But talk about the beginning. What made you start this company?
So basically 2014, 15, when my son graduated from USC, there was a lot of buzz about Bitcoin, crypto. And my son approached me and convinced me to start investing in these miners out of China. And we actually built our first farm in LA, very high cost of electricity. And we bought this first S5 at the time and these Dash miners. And we started to set up a couple hundred of them. And that was fascinating because it was basically getting a printing crypto machine. And then quickly we realized that the cost of electricity was a very important factor. And we started to look into not only green energy, but low cost electricity in the US. And we came with the hydropower in Niagara Falls, upstate New York. And that's where we started to open our second farm. Bought this more sophisticated miners at the time called S9. And we started to develop farm after farm and grow the business until 2020, few weeks before COVID, where we got public and started the venture of expanding, rapidly the crypto mining.
So when you first started, where was Bitcoin? I mean, Bitcoin 2000, you said 14, 15?
Yeah, it was very low price. I think it was $1,000.
So you're able to foresee this in 2014, 15. I just looking at your background, your profile, you love innovation. You love getting into things very early. And what I was fascinated about, which got me on board here, is you told me something when I met with you personally that, hey, this Bitcoin mining is more of a stepping stone because it has a huge future in a transition into another business, which everyone's talking about today is AI and the power generation that they need. But you're transitioning into something that's fascinating because what you do is you went out there and you actually own a lot of this power. Talk about some of the assets you own, because that's relevant into the next step in the AI, which is fascinating for me, which you just basically started, seems like around 6 months ago, is probably transitioning into that, going from tier 1 to tier 3. But let's get to the assets here, because once we get to the assets and the transition, that's when everything comes together, where I'm fascinated with. This is a stock that I think can go up tremendously from here, and a company that just has a long, long runway of growth. Talk about those assets that you actually acquired and that you have on right now for your company.
So, well, it's a good question, Frank. We raised in the last few years close to $100 million, which we invested every penny into assets. We even acquired a power plant, combined cycle. That makes us a little bit different than our competition because we are in the energy business. Actually, if you dissect our PR for February, out of 4.7 million of revenues for February, 45% was unrelated to Bitcoin, and it was purely selling energy to the grid at a very good margin. I think we made about $700K just on selling energy just in February. So Bitcoin was an incredible asset and a great business is a stepping stone to build up infrastructure. And now we have a very solid infrastructure that can be used for energy, that can be used for AI and HPC. And we are leveraging this infrastructure to transition now to data centers. And what makes us different from the other guys is that we are developing a power infrastructure, and Bitcoin mining is one of the applications of our power infrastructure, and we are developing now AI and HPC infrastructure, which has a much bigger multiple than Bitcoin mining, is more predictable, and has an incredible future. As you know, there are trillions of dollars that are going to be invested in AI, and I think we are at the beginning. So we're well positioned to leverage and utilize our assets.
So when you look at other Bitcoin miners, I think people could identify and say, okay, we know Mara, we know Core Scientific, we know, Bit Digital, a lot of these companies who again, do the Bitcoin mining operations. But when I look at what you guys did and how you're transitioning, and I hear them saying that they're going to transition, but you've been talking about this for 6 months, and now you're actually transitioning. So you actually own your power, right? So you have a plant in Alabama. a plant in Tonawanda, New York, another plant in Buffalo, New York, and then you have North Carolina with assets coming on. Now, stay with me here, everyone, because I got to get into a little bit of math for you to understand this, where, megawatt is the power, but you're looking at pretty much over 100 megawatts of power, and then you have capacity of 200 megawatts of power. Could you talk about megawatts of power? Because this is an industry standard, kind of guys like same stores is for retailers, right? So when you look at the megawatts in power, you would say, okay, a megawatt of power may be worth about $500,000, and you can correct me if I'm wrong on that, if it's on a Bitcoin mining, right? And that's tier one. But when you go to tier three and you're able to transition this stuff, when now you're selling it to some of these people within AI, where it's power generation, and that's what you're talking about, the transition to power, where it's not just, the Bitcoin mining. How much is each megawatt worth? Because I think it's worth 500,000 when it's just Bitcoin mining, again, depending on some of the dynamics there. But when you switch it over to tier three, which a lot of companies aren't able to do, talk about the valuation of your company and what's going to happen.
So it's a good question. The valuation on the tier three is about $15 million a megawatt.
Say that again.
$15 million per megawatt.
And how much is it if it's tier one, which is data mining?
$500K, but the capex is also different. In tier three, you have a higher level of redundancy. You have a higher level of security. So there's more capex involved, but the multiple is 30x. It's 30 times more valuable, and there's extra value because it's predictable. You sign a 5 or 10 year contract with a customer, and there's no volatility. So it's very valuable. As far as what makes us unique in our infrastructure, we not only have megawatt power available through our substation and the grids, we also generate power through our power plant. And very few crypto miners have power plants where they generate power. So we generate power that we allocate to the communities, to the grids. We allocate to our mining operation, and we allocate to our data centers now. And that makes us pretty different and unique in our space. We have licenses to sell power, which most of them do not have. It took us like 3 years to get these licenses from FERC, Federal Energy Commission, and from the PSC. And now we can go and expand and acquire other power plants in the US, which is a very specific niche, and develop data centers. And we are basically vertical. And for instance, for tier three, which you need redundancy to generate power and be able to pull power from the grid, you already have two sources of energy. You generate, you pull from the grid. So already you're redundant, and already you're qualified to be on a tier three base data center. So that gives us a lot of edge and speed to market as well. Most of the big companies are building data centers within 3 to 5 years. We'll do it within 18 months. So that put us in a very unique situation with a high demand, with high multiple.
So you guys have the capacity, you guys have the electricity, right? So it separates you from your competitors. Say a guy like me, okay, data centers, AI, they all need power. Okay, I'm going to go and buy a power plant because I'm going to raise a lot of money and $100 million, $200, $500 million, and I'm going to buy power plants and I'm going to start. Talk about that process, because there's massive, the barriers of entry into this, especially where you are, that, just in government and policies of FERC and all the things. Talk about that process. You talked about it a little bit and touched up on it, but this isn't something that anyone could just do. It's something that where you guys have a huge head start because you own this electricity. How difficult it is for a guy maybe have a little experience in this industry, say, hey, I want to just buy power plants and I want to compete with everybody. How difficult is that process? Is it almost impossible?
So for a newcomer with plenty of capital, to buy a power plant, you have to go through a process with utilities, with federal agencies, with state agencies that move very, very slow. And the process is anywhere from 24 to 36 months, 2 to 3 years, just to get the approval to get started. You have to do lot studies. You have to get the approval. It's a very long process. So 2, 3 years, you do nothing but legal work. Then in 2 to 3 years from now, when you authorize to operate, then you have to build the site. That takes another 2, 3 years. So it's a very lengthy process, highly regulated, because energy is highly regulated. And because we started in 2014-15, we have a big head start. We started the process a long time ago. So therefore, we have assets that are valuable for this transition. And us and every miner who have assets have a value. We just added the fact that we are generating power, but give us a different edge.
So I'm bringing this up because I'm looking at, and you see me looking at it on the screen here, is that this is March 31st. So we're talking about, just a week ago. You reported your yearly financials and also your quarterly financials. And when I look at yearly financials, it's saying that, financials at 42% revenue growth year over year, 220% EBITDA turnaround. Some of these things that I look at where revenue grew 42% year over year to $37 million. So your revenue is growing $37 million. And, yes, it's high cost of capital, but you talk about your EBITDA improved to over $8.8 million in 2024. Why do you think your market cap is sitting at a $30 million market cap when you have no debt? You have $10 million, over $10 million in cash that you raise, and also when you have on the balance sheet in terms of the Bitcoin that you own that you accumulated over the past few years. With this revenue, this growth model, and just the assets that you own are probably worth 3x of what the stock is. What do you think is a disconnect between the stock and what this should be valued? Because when I look at it, it's just insane.
So there are a few factors. One, we decided through the years to build the infrastructure with solid assets versus market it with advertisement and empty promises. The second, we just dropped in the last 6-7 weeks 70% in market value, along with many companies. The third reason, we are not affiliated with any indexes. We need to be at a $300 million market cap, basically, to create more volume, more liquidity, and get to the indexes that takes you to a different level. So we believe that our fundamentals are great, unique, because we have no debts. We can weather any storms. We're not worried. Where other micro listed companies have a very high level of debts, may not make it. So we are in a very good situation in that respect. We feel that we dropped dramatically, and it's not representing our value, because we have great value. We are trending up. First quarter demonstrates that we are on a trend of $50 million without adding any additional business, which we plan to do. We plan to add, and grow our business this year. So we should have an incredible year. And I believe that the long-term investors, will get their return based on fundamentals with us. And when we start our conversion to HPC and AI data centers, our multiple should grow dramatically. So this is our game plan.
So how difficult is it? Because you explained this to me, and it was very, I had to listen to you and then ask you even more questions and follow-up questions. How difficult is it for just a traditional Bitcoin miner to go into tier 3, not just for the electricity, but you were talking about the relationship with suppliers. where you need those relationships to actually build this certain infrastructure from tier 1 to tier 3. Could you outline that? Because that's another high barrier to entry that I saw. Okay, not every company can just turn around and do this. You just said it takes, it could take 4 or 5 years to really, get a new plant up and running, where you have access and you could do this because you own it, where, it's the transition. But talk about the transition with the suppliers or relationships and how important that is as well.
But so through the years, we accumulated a lot of different equipment.
Mm-hmm.
I'll give you one simple equipment like transformers. Transformers today, supply-wise, it's anywhere from 6 months to a year to get a transformer.
Mm-hmm.
And we own many transformers. You have switch gears are necessary. You have generators, backup generators, UPSs. So all this equipment that we accumulated for the sake of Bitcoin mining, we can use and leverage for data centers. And that gives us, again, a head start. We don't have to wait 6 months to a year. We don't have to finance it because we own it. Mm-hmm. So the combination of owning the power assets, owning the power equipment, give us, the ability to move faster. And in the next 3 to 5 years, it's kind of a race to who is capable of executing. And we are better positioned than newcomers for sure, or most of people because of our assets.
Yeah, it's incredible how much of a head start you have on everyone, which is fascinating to me. Even the Bitcoin miners, as well as if new people are coming in. I don't know if you could talk about this, but do you have high level? Because we hear data centers, we hear Microsoft, we hear Facebook, which is Meta, we hear Oracle, right? We hear these Amazons. These are the Googles. They're the ones that are spending over $300 billion in capex. A lot of this is going into power and AI and stuff like that. And this is just over the next year, right? Just a couple of them. Which is enormous. And none of them have said that they're cutting, even though we have difficult market conditions. None of them have announced and said we're cutting because they need more power, which is AI keeping, this revolution just keep continuing, and the need for speed and power. Do you have any of these? Do you have big clients? Do you have these guys knocking on the door? And I don't know how much you could say about that, but can you say, hey, we have tier 1 customers or big customers? I don't know if you could name them or not, but are you seeing those people knock on the door because they're looking at your company going, wow, these guys are just sitting here with power. We can get operation. We can get this thing right up right away. I mean, after all, this as well as I do, they're booking power. I mean, 3 Mile Island and that Microsoft deal is for them to basically restart this part of the plant for 5 years and then lock in electricity for 20 years after that, which I don't think they're even going to get this operational in 5 years when you go to permitting local, state, and federal. They're locking stuff out 20, 30 years. You're sitting here right now, ready to go with pretty, a significant power that I would think a lot of these guys may be knocking on the door.
So we actually have developed a relationship with one or JV partner that's a $100 billion plus AAA company that we've been doing mining, and we're entertaining doing, of course, AI with the same partner, which we can grow dramatically with for the next 5 years. So we do have the relationship and the history partnership with, I can't disclose the name because we're under NDA, but we are currently working with this partner for the last 2 years.
Which is great. I mean, having a partner that you're working with that sees what you're capable of and working with you for 2 years, and now it's going to sign on to more of this, especially with the transition, is that's really incredible. You're not just getting a new guy that's trying you out. I mean, this is a person that you have a relationship with, it sounds like.
That's correct.
No, that's great. So I want to transition a little bit here, because what blew me away when I mentioned, I mean, a lot of CEOs of small companies, and everyone has a great story, and they all talk about, where that company's going to go and their projections, that's supposed to do, right? With CEOs. When I spoke to you, which I loved, is when you compared yourself to other companies within mining, you were saying how some of these companies dilute themselves, and you never want to do that. You run a debt-free company right now. Not that leverage is the worst, but some of these companies are leveraged so much, and we know interest rates are high. Refinancing debt is incredible, but you were so concerned about your shareholders and not diluting them and making sure that, you're doing the right thing for them. Talk about that process, because I don't see the same thing from the other competitors, even with MicroStrategy dilution that's taking place. I love what he's doing. He's been proven right, even with the stock down off of its highs. He's, since 2020 buying Bitcoin through the convertible strategy now. But when I see what you're doing in terms of like caring about your share, talk about that and how meaningful that is to you. Because I don't really get that from a lot of CEOs where they're looking at, the stock's going to go higher, you're going to make a lot of money. You were concerned with like almost the infrastructure of your own company, like the way it's formatted, saying, hey, we have shareholders here that we want to take care of and do the right thing about. Talk about that and how important that is to you.
So originally, when we initially started the company, it was private, and I invested early on about $8 million of my own money and never sold one stock. Kept on buying stocks, actually, even bought stock last year, more stock last year. And I protect, of course, the investors because I protect myself. And I'm a major shareholder with my son, Alec. And I really, I'm against dilution. Of course, to grow, you need to raise capital for growth purpose. But I'm very interested and concerned about the fundamentals of a company, which makes us different than your usual CEO who's got hired, who has no skin in the game, and doesn't really care about diluting as long as they get their compensation and their bonuses and so on. That's what matters. My strategy is very long term. We want to build a business. We have an opportunity with the AI to build a very valuable business in the sense that as we get started, we copy and paste and get more data centers, bigger data centers. We will have access to debt financing because you have predictable income. So it's a much different opposite business than the Bitcoin mining, where it's so volatile that you're scared of debt financing because you cannot rely on future income. So based on this transitional business, we're going to be able to grow safer and faster. And there's no really limit on the valuation of a company that has built data centers. It's very valuable now.
So you look young, but you've been around the industry. You talk about the 90s, you've been around this, and now you're talking about like how important it is to make sure, the structure, the fundamentals are good because of how volatile this industry is, which we all know within crypto. We've seen a lot of big guys go out because they leverage too much. You have a personal friend that I've heard about from someone else, from another source, who and I don't know if you get the value from that part, where we're running a company that way, but he happens to be Peter Lynch. And people know Peter Lynch, and it is that Peter Lynch, guys, Fidelity, one of the greatest investors of all time. Talk about that if you can, about your relationship. I don't know if you do or not, but I heard that, hey, I don't know if he's an investor in a company, coming into the company, but I know you have that relationship with him where I heard, it's much closer than just like, hey, how you doing? I wonder if the value part of it, if you looking at, hey, our fundamentals, and, they always need to be very, very strong. This way we continue to grow well into the future.
So Peter Lynch, I've been in touch with him very frequently, 4 or 5 times a year for sure. And he's one of the major investors of our company, and he's been investing for the last 4 years or 5 years. And his piece of advice always been: do not worry about how fast you go. Just have a long-term vision, have good fundamentals, and it will pay off. And he's been a very big supporter of our company. He believes that we are very valuable, and if we are capable of transitioning in this AI HPC business model, we should really create a lot of value for the company and the investors. So he's been very supportive to us.
Wow. So Peter Lynch, is he, I mean, I don't know how much he owns of the stock. I don't know if, again, I can find that out and stuff, but I didn't even know he was an owner or a significant owner. But so you're talking about one of the greatest value investors investing in, crypto, but not just crypto, because as of last quarter, what I love is you said this 6 months ago, we're transitioning into tier 3. I hear everybody saying that. It's almost like when you hear a company saying, hey, we're going into AI. Every company has AI, but they really don't have AI, right? But now you look at your last quarter, which was reported to this interview. This is a little over a week ago. You're showing that the revenue that came in from the quarter, 75% from mining, 25% from energy sales. So you're looking at this transition. It's happening. You're not just saying it. Now you're seeing the results. I mean, that has to have you very excited. It has to have Peter Lynch very excited. But, for him to be a significant investor, how significant of an investor is? Could you say that, or?
I can't really say, but he's a pretty significant investor here.
Wow, that's fantastic.
He's there and supportive, and he believes in the company.
Last question here. Where do you see your company in, say, 12 months in terms of the transition and what you're doing? Because you have lots of plans out there. You have it. Your first page of your presentation shows that timeline of exactly what you're very like plan oriented. This is what we're going to do. This is, and you're very open and transparent about it with your shareholders on your presentation. It's one of the first pages on your presentation. This is the transition. Where do you see yourself, say, 6 months, 12 months, and maybe either further to 2 years from now?
So it's a working process, and now we are finalizing the stage of all the permitting, all the designs. We hired one of the most qualified architect in the US. Used to be a division of HP, Hewlett-Packard, a very qualified architect. And we designed our data center. Beautiful, which I may share the deck with you, Frank. And we're going to start to do in different phases, different halls, and we're going to go like 8 megawatts at the time, 8, and go in phases. So in the next 2 years, our goal is to go from anywhere up to 55 megawatts worth of data centers, which is huge for data center tier 3. Mm-hmm. And from there, upon execution, we're going to try to leverage and optimize our power assets to grow to a different level and go to the hyperscale data centers, which are usually 200 megawatt and up. So we are working on hyperscale, but first, we need to execute the first initial tier 3, get it running, and then we will expand. And then we have a path. This is, when you become a pro in tier 3 data centers, it's a very limited supply. So we really expect to be very busy in this expansion.
So did I hear that right? You're saying like within, say, 2 years, like you're doing 8 megawatts at a time, right? Is that what you said?
Correct.
And then what, up to 50, you said? Or 50 and
55 megawatts.
Over what, over a 2 year period?
Over 2 years, correct.
And you're saying, so 55 megawatts. And what did you say that they were valued at before?
About $15 million a megawatt.
All right. So even if we take 10 million.
Yeah, it's 550 million.
550 million, and your market cap is sitting at 30 million with no debt, with a strong balance sheet, just to put that in perspective. Because this is a fascinating company I feel like nobody knows about. I think that's going to change very soon, as soon as the word gets out of what you guys are doing, especially the fact that you're not just saying what a lot of people say, well, we're going to get into AI, we're going to get into power. You're in it, and you see it with your latest quarter results that the transition is taking place now. And the future looks very bright for you guys. So listen, I really appreciate you coming on the podcast to talk to me about this. I don't see too many interviews. I usually do a little research and see if you've done other interviews. I really appreciate it. I love it. And hopefully you join us like maybe every 3 to 6 months to give us an update of what's going on. But good luck to everything. I'm an investor in this company. I think it's incredible. I think a lot of people should be investors in this company because especially at this level with the pullback and all Bitcoin related and all the market related, I think it's a really good buy here. So really incredible stuff. I just want to say thank you so much for coming on.
Thank you, Frank. Thank you so much for your time. Thank you.
Wall Street Unplugged is produced by Curzio Research, one of the most respected financial media companies in the industry. The information presented on Wall Street Unplugged is the opinion of its host and guests. You should not base your investment decisions solely on this broadcast. Remember, it's your money and your responsibility.